are staying safe and are in the best of your health. I extend to you a warm welcome to etcfo.com. My name is Nidhi Chugh, and in this special series, Future of Compliance, brought to you by Clear from the makers of Clear Tax, we bring to you this exclusive masterclass on e-tax landscape, driving new business strategy with technology. The key trends impacting tax and regulatory systems are digital, technology adoption, and changing policies. Now, technology is disrupting the way tax functions work. It's the e world. For example, e assessment, e filing, e accounting, e matching, e invoicing. Even the government is leveraging digital platforms to assess taxpayer data, including cross referencing information at the source. While digital transformation is a crucial driver for businesses in compliance and to keep track of tax liabilities, it is now time to look at business strategies from the e lens. This masterclass will focus on how to tackle compliance and plan ahead, building and supporting next generation infrastructure for tax authorities and tax functions, and critical challenges in the adoption and implementation of technologies that will influence direct and indirect tax systems and functions. Today, we have with us Mr. Gopal Krishnan Shivadas, who is a senior advocate designated by the Karnataka High Court in 2018 with a more than 25 years of standing at the bar. He is well respected at various legal forums, primarily appearing in high courts of Karnataka, Andhra Pradesh, Telangana, Kerala, Kolkata, New Delhi, and the Supreme Court of India. Sri Shivadas is also highly regarded in various quasi judicial forums and arbitral tribunals. His specialization includes central excise, customs, exim policy, anti dumping issues, service tax, value added tax, and WTO laws. He is also an expert in issues relating to direct tax, corporate, commercial tax, and intellectual property rights. Before handing it over to Mr. Shivadas, I would request all attendees of this masterclass to please put forth all your questions in the Q&A box so that we can take them up at the end of the session. Without any further delay, I would like to invite Mr. Shivadas to take over the session. Over to you, sir.
Topic that is there for today's discussion is the one that is quite relevant today in terms of the administration of tax. As most of you would be aware, over a period of time, the government has been relying and laying greater emphasis on technologies for the purpose of their tax administration and tax collection. Now, if you look at the tax landscape as it is existing today, you either take the direct tax or you take indirect tax, it's technologically oriented and driven completely by systems. In fact, the emphasis on systems did start few years before when we had online filings of returns getting started in service tax initially and thereafter to the customs. Then when VAT was introduced in 2005, somewhere between 2015 or so, the state government started emphasizing more on the systems compliance for them to have a better picture about the administration and compliance. And now with GST getting introduced, I think the most emphatical factor as far as GST is concerned is the system or the GSTN. So with this background, I think we should be in a position to now stand and see where our business functioning, where the systems or internal systems, companies' procedures are in line with what the government really wants the compliance to be and what it wants to be seen as complying with the laws. So what we would do in this session is to run through the various changes that are adopted by the government in the various laws, especially the tax laws. I would get into it in slight detail because I would not make references in greater references to the statutory provisions or the case laws, but I would try to give a broad pattern of how the government is looking at in terms of the taxpayers' obligations and rights and the tax administration's accountability. And once we have a look at all this, then maybe we can sit back and see what are the key takeaways from this entire uh, technological setup which the government is emphasizing. Now, this is how we will have a look at the uh, progress or the, I would say, the steps taken by the government from an technology perspective. I would start with what has been done in GST and thereafter proceed to also try to make a comparison of what happens in customs, what happens in income tax, and thereafter we will see at the end of it what exactly we as businesses should really be looking at. So we'll have a look at maybe the data analytics perspective from the government, then this system of GSTN, then what is this concept of e-filing and e-matching that is there in GST, then the e-assessment, e-invoicing, and e-accounting. And finally, we will conclude with the faceless assessments as we have today in the direct and indirect taxes. Now, if you look at what exactly the government's perspective is of data analytics, I would start with the budget speech of 2018, where the minister did point out that the emphasis now is on the maximum use of information technology. And the intention is to remove the human contact with the assessees as well as to plug tax avoidance. More significantly, the government has been very transparent in indicating that they are now going to use the data mining capability, which is both in-house as well as outsourced. This data mining capability would mean that the government would have an access to the entire information of a business so as to compare and contrast the extent of compliance by individual business entities. At the same time, the emphasis also is on enforcing greater accountability of the officers of the tax department so as to identify specific act of commission and omission. The objective of the government or the emphasis is on ensuring that honest tax compliant person would be treated with dignity and courtesy. Now, taking it slightly more, if you look at the GST Council meeting that was held in 2017, about 3 or 4 months from the implementation of GST, this is how discussions took place between the government, between the various state governments and the center. And where significantly, if you see what interesting insights which the government has got, which it was discussed in the GST Council meeting, where they looked at the taxes paid at the customs, the credits taken in the GST regime, and then the compliance of it in terms of output tax. So all these are being looked at through the data analytics method. Now the body or the system that drives this tax compliance and procedures in GST is called GSTN, Goods Services Tax Network. It's essentially was incorporated in 2013, promoted by both the central government and the state government. And the purpose was to help with smoother and better implementation, administration, and regulation of GST. The entire back-end infrastructure and the website development has been outsourced to one of the IT companies. Now, what is the objective of the GSTN? Why I'm emphasizing, why I'm taking you through the GSTN is because this has a lot more features, has more indications of what the government really looks at in the future in respect of all types of taxes. Maybe the other central taxes, the other state taxes, but this will be the manner in which they would like the standardization to take place. Now, the purpose of GSTN is to provide a common and shared IT infrastructure and services to the central and the state governments, taxpayers, and all other stakeholders for the implementation of GST. And what is the purpose? To enable filing of returns and processing of payments for all the states on a commonly shared platform. Facilitation, implementation, and standardization of providing services to the taxpayer through the common GST portal, and helping tax authorities in improving tax compliance and transparency of tax administrative system. So with this system in place, how has the government gone about implementing its e-technology in the tax administration? We start with first our tax returns and how the figures in various returns are getting matched even by the system as well as by the government. Why I'm getting into all these details is because each company, each one of you need to have a complete knowledge of how the details which you provide in terms of the returns gets analyzed after you file the returns in terms of matching, in terms of comparison with the other details which you provide to various government departments, so that you know that if you provide these details, then these details get mapped in respect of all other contemporaneous details which you have provided for the government to come to a correct conclusion as to your compliance in terms of tax regimes or tax rules. Therefore, it is necessary for you to know what happens after you provide the details to the government, so that you have enough precautions or enough systems in place to ensure that whatever you provide to the government in terms of the returns is what really is being possible to substantiate back inside your organization. Now, just to give a small background, these earlier pre-GST regime also, we did have the situations of technology being used in respect of the pre-GST taxes like the service tax, VAT, etc. So the functionalities were enabled and the filing of the returns was made online. Other functionalities also were driven through the system. But all this was more in terms of procedures. The government did not really have a legal provision which authorized the matching of details which were given by one assessee in respect of various taxes, so as to make use of it for any comparison. They did do it by means of an investigation, by means of a verification, asking for details from the assessees, but it was more in terms of procedures being in place so that it's easier for them to do an analytics. Now, what has happened in GST? Because once all of you know how the GSTN, I'm sure most of you would know how the GSTN works and how GST systems for the past 4 years has been working, how both it has its positives and disadvantages. But we just have a look at what exactly they have in mind when they have introduced these e-return system under the GST. Now, to start with, GST regime was perceived to be a technology-oriented change, and the filing of the returns was to be in a manner which is conducive for both the taxpayers and the government. Now, over the last 4 years, we have seen that this implementation has not been so smooth because of various technological and logistic changes. So, some of these e-return systems have been kept on hold in the GST, most notably the implementation of what we know as GSTRN2 and GSTRN3. GSTRN2 is in respect of the credits that are available to a business entity, and GSTRN3 is in respect of the output taxes that are liable to be paid by a business entity. So these two, in terms of the final format of returns, and the manner in which it is compatible to the GSTN system have been kept on hold. But then there are alternative forms that have been put in place in the system. 2 is replaced with 2A and 3 is with 3B. So these are till now some sort of an I would say a rough system of having returns in place, but all these are precursor for an actual return to come in this GSTN system over a period of time. If you see the last bullet, you will see that in the 31st GST Council meeting that was held on 22/12/2018, it has been decided to have a consolidated e-return system so that you consolidate all the various returns in respect of inputs, in respect of your output, the credits available, then your output taxes payable, value of output services, output goods, everything, all of them will be consolidated in one consolidated return. So the objective is to simplify the return process as much as possible, so as to avoid any opaqueness on both on part of the tax authorities as well as making it transparent for the taxpayer like you and I. Now, if you really look at the manner in which the implementation of the GSTN system or the technology in with respect to GST, you would note that there has been a substantial increase in the number of returns that have been filed over a period of time, from maybe August 17, and today we are in June. Let's assume even a June 21 figures. You will find there is a steady, substantial increase in the number of returns getting filed. More and more of companies getting into the formal economy, so that it's possible for both the taxpayer, the business, and the government to really see how business operates. In fact, about 60-70 crores of returns have been filed till almost June 2021, which is a very substantial increase from maybe less than about 15 crores in July 2017. Now, these are some of the provisions that are there in GST with reference to the various returns. I don't want to trouble you on all this, but suffice to say that the GST law is trying to have as an inbuilt system, even in statutory protection, so that whatever activities they do in the GSTN has the backing of law in terms of the GST law. Now, taking it forward, especially the discussion on how to have a consolidated returns. Now, this is what is proposed to the new return system under the GST. Why I'm pointing it out is that if you really have a look at how the new return is thought to be made by the government, it will enable all of you to go back and see whether your internal systems, both in terms of your purchases, then in terms of your accounting, then in terms of your sales, in terms of your marketing, the internal systems in place in respect of accounting, each one of these parts of transactions are compatible to what the government really wants in terms of the consolidated return. Now, what really the government wants in this consolidated return is this. The purpose of consolidating the return into one single comprehensive system is essentially to streamline the process of filing returns, making it easy, convenient, and compatible for the taxpayers to file the returns. And the provision of a single interface through the GST returns will reduce confusion among the taxpayers as to under which form they will be required to file the returns. And more importantly, the consolidation will enable the tax authorities to determine and compute the tax liability of the registered person. So this is what the intention of the government is, trying to make it as a consolidated return. So if this is what the government wants, all of you need to go back and see that if this system is to be put in place by the government, what is it that you internally within the organization have as a procedure or a system in place to ensure that the movement of information to the government from your systems are as easy and comfortable, so as to not to create difficulties for all of us. Now, that's where if you really look at the way the new old returns and the new returns are sought to be made, multiple returns I'm talking about the GST itself. from 2017, let's say till December 2021, what has been followed now and what is sought to be made, where the single objective is that the multiple returns to be filed so far will be consolidated into one single return system. Then till now, an input tax credit could be claimed on a self-declaration basis, of course, subject to certain restrictions. Now, what they have proposed to do is that the input tax credit can be claimed only on the basis of invoices uploaded by the supplier. So if your supplier supplies you goods, you receive it, you pay him the value along with the tax. But if the supplier does not upload his invoice, then your availing of input tax credit could be questioned. Now, whether that is legally right or not is slightly a different issue, but the fact remains that the system is sought to be driven in such a manner that businesses discipline between themselves to ensure that there is a proper compliance from the supplier to the receiver and then to the further purchaser. That is how the whole system is sought to be driven. Similarly, any missing invoices and amendments also is sought to be, you can amend it by filing what is called an amendment return, which till now we did not have it, but that's what is the new system that is sought to be made. Now, this is how broadly the new changes are in the GSTN. Now, if you really look at it, you will really know how much of it will be useful for you at a business end. For example, there's something called an harmonized system of nomenclature entry, a tariff code, what we call. Now, that needs to be submitted today at a document level, as against the summary HSN, which was required under the earlier regime. So the question which all of us should ask ourselves is, do we have systems in place by which each invoice for an outward supply of goods or a service is able to capture the HSN for that particular goods or services? Or is it necessary to put in place a system by which the actual HSN is captured? Because only if the correct HSN is captured and then you declare it in the invoice, the further recipient of the goods will be in a position to take it as part of a system and then maybe take credit. So that is very crucial for you from a supplier's point of view, both for payment of the correct tax as well as for your purchaser to take the credits. Similarly, there are inward supplies which are liable to a reverse charge mechanism. That also has to be declared at the GSTN level by the recipient of supplies. Now, the concept of business to, that is B2C as they call, business to a consumer, that concept is being removed. Everybody will work at the same level excepting for the composition taxpayers. Now, a recipient can report missing invoices as an invoice level. So what essentially the new system will do is that the new return system introduces a return facility which will allow a registered person to make amendments to any omission or an error made in the GST return 1. So why I'm pointing this out to all of you is that it is now necessary for the businesses to come down to a granular level as to their correctness of the declarations of both the goods, the nature of the goods, nature of the services, the correct HSN code, so as to capture the correct amount of tax payable. Because if that is being done, then several other problems down the line will get solved. But if you have a problem at the initial stage, at your stage where you are not able to capture these details properly, then you will have a difficulty both in terms of compliance and in terms of your businesses being done. That's how technology is being used by the government to discipline even the businesses to ensure that they comply with the business, and it makes the further transactions to be transparent, and for the government also to look at whether the declaration of the tax, the payment of it is in the correct manner. Now, this is a concept they are introducing under GST, e-matching, where, for example, the third bullet, if you see, e-matching is an important step for claiming input tax credit. A recipient can only claim ITC if the details of the inward supply match with the details of the outward supply. This is done through an auto population mechanism where the details filed by the outward supplier are automatically reflected on the recipient's GSTR and 2-year return. Only when the details in two forms match will the recipient be able to claim the ITC. Now, this is where the systems which you as a supplier adopt and you as a purchaser adopt have to be compatible. Both the supplier and the purchaser has to be in sync to ensure that their declarations of the nature of the activities, nature of the goods, services, taxes, exemption notifications are compatible or are known to both or are correct in terms of both what the supplier wants to declare and what the purchaser wants for the purpose of taking credit. That is where technology is now being used by the government to ensure that both the supplier and the purchaser are in sync in terms of the declaration of details itself. Now, this is, of course, I've introduced now a procedure for furnishing returns and availing input tax credit. Now, I will not take too much time on this provision. This is there in the slides. So, once the e-matching is being done, then it is expected that this will do away with a lot of hindrances due to the implementation of some of the returns that are now getting done. Because they both from a logistics point of view and a technology point of view, the government is handicapped in implementing certain returns, certain forms of returns. But once the e-matching happens in terms of the consolidated return or what is to be done now, then it makes it easier for the government also to appreciate the correctness of the tax paid so that taxpayers are not put into difficulties with unnecessary queries and verification. Now, the result of the e-matching would be what the government expects to arrive at what is called a mismatch. So the mismatch would be, the mismatch essentially would result in what we call as a rejection of an input tax credit to the purchaser. Now, what are the parameters for matching? And these parameters for matching is part of the system, the GSTN, which the government will have. So the moment you upload your invoice with the details, and then the invoice is being verified by the system, it will match the parameters in respect of few parameters. For example, I put it out there, the GSTIN parameter, your registration, then what type of document it is. These are all primary parameters. Then the document number, document date, value, tax amount and tax amount total, headwise as well as total. The exact mismatch would be if all the 7 parameters do not match. But if there's something called a partial match, if the first 2 primary parameters do not match, namely GSTN and the document type, and one of the 5 remaining parameters do not match, then that is called a partial match. Maybe some portion of the credit, etc., can be extended. The system will decide it. The probable mismatch is one of the 2 primary parameters not matching, even though the remaining 5 parameters match. You will appreciate that through this system, the government is getting into or making use of the technology to really look at the document that is generated by a supplier and the document that is used by a receiver for the purpose of taking credit to see whether all the parameters match. Ideally, they should match if the details are right. But if there is an incompatibility between what is in terms of declaration and the actual factor matter, and then what is being used, then all these mismatching will be evident even by the system. So this is where it is extremely important for the systems of each of one of your organizations to really know what exactly the GSTN would do the moment you upload your invoices. Now, once we look at the documents being uploaded, being compared by the GSTN, and you know that this mismatch will be looked at, the government has gone a step further to introduce what is called an e-invoicing, essentially to replace the hard copies of documents that are being there. hard copies will definitely be there, but over a period of time, maybe the intention is to do away substantially with the hard copies for big businesses, so that the whole business is being done on a formal basis through the electronic means. If you look at the background of e-invoicing, it was initially proposed in the GST Council meeting on 25/6/2019 to be implemented in a phased manner. There was a technical subgroup that was constituted to look into the technical aspects to monitor both B2B and B2C transactions. It was then proposed to introduce the e-invoicing mandatorily for all the taxpayers with annual aggregate turnover of above 100 crores from 1st of April 2020. But then with the sudden onset of COVID, etc., these dates were extended. And now they have introduced this e-invoicing for registered persons or businesses whose aggregate turnover is more than 500 crores. So for all these people, e-invoicing is being made mandatory. Now it's a very significant or a nice way of looking at how the e-invoicing will be done. Now, each one of you, the taxpayers, will continue to create your own GST invoices on your own accounting system, billing and ERP systems. So that's as far as your organization systems is concerned. And these invoices are to be reported in a standard format in an invoice registration portal under form GST INV1. That will be part of the GSTN system. Now, once that is reported, the portal generates what is called as an invoice reference number and digitally signs the invoice. So thereafter it becomes part of an e-invoice in the system. The IRP also generates a QR code using the unique IRN along with certain other key features. Now this QR code enables the verification of the fact whether the e-invoice has been reported on the IRP or not, and whether the digital signature is intact or tampered with using mobile apps. So if you really see, they would rely on the GST invoices raised by the businesses. And then once you upload this invoice onto the portal, then everything else falls in place for the GST, and GST applies its own measures to find out whether this all other key features are there, whether the e-invoicing is as is reported, and whether the digital signature is right, etc. So the starting point is your own systems, but thereafter the technology takes over to find out the correctness of the invoices generated. Because there are some exceptions for these e-invoices. For these types of units, the e-invoicing has not been put in place. Maybe over a period of time, this will come. Now, this is how I've just put it in a step form, how the e-invoicing takes place. You upload your invoice to the IRP. IRP validates the uploaded data, verifies the existence of the same IRN, then it gets populated in terms of the GSTN system. Then a QR code is added. Seller, after receiving the signed JSON with IRN, can issue e-invoice to the buyer. Buyers can view the invoice details in the GSTRN and can verify the authenticity. The whole thing is driven by technology. So a supplier sitting in his office generates the invoice, uploads it. The purchaser sitting in his office is able to view the invoice generated through the GSTRN system. This is how technology is now connecting the purchaser and the supplier in terms of one document that is raised, even really without looking into really how the goods have moved, whether the presumption is whatever you say in the invoice is what is really happening at the ground level. So we will go by what has been declared in the invoice, and then we will view it from a systems perspective. These are some notifications that have been issued. Manner of issuing invoice, provisions. This is where the government now indicates to whom the e-invoicing will apply. So initially they have now recommended to the big businesses, and over a period of time, the intention is to cover all businesses who are part of the formal systems. And the ultimate idea is any invoice that is generated and which is not in compliance with the rules specified for this purpose will be considered as an invalid invoice. So it's all the more important for all of you to ensure that in your respective organizations, you have systems in place by which you are clear about the details which you are required to have in your invoices being raised and how that is compatible to what is the requirement of the government in terms of the e-invoicing rules. So this is the key point as far as e-invoicing is concerned. The IRP generated QR code is required for all invoices. Sellers should possess a utility that can output invoice data in what we call as a JavaScript object notation format, JSON format. And then GST and empaneled providers offer free accounting and billing systems that can be accessed by small and medium taxpayers. So this is exactly the landscape of the tax administration that is driven by technology, which is going to be the future in the country. And what we have today in GST, why they have taken, I have undertaken an analysis of GST is because this system essentially compares or in fact encompasses a major part of businesses in India. Unlike maybe a customs or even a direct tax, so where it's all specific groups that are required to follow it, GST really covers a large portion of the businesses in terms of population, and therefore once we are clear about how the whole thing operates in GST, we should go back and see how our systems are in place for the purpose of being compatible with the GST. So these are the recent improvements with reference to e-invoicing. Over a period of time that the columns in the e-invoicing are also getting evolved over a period of time. For example, earlier we did not have a situation of an import data being incorporated. Now that option is being given. The limitation in terms of the invoice has been increased to about 20 items in one invoice. So this gets evolved. But as we evolve, the greater emphasis is being given on the use of technology. So why does the government think that e-invoicing will benefit business? It will eliminate fake invoices. It will substantially reduce the need for input credit verification by the department. It will also help in a one-time reporting on a business-to-business invoice data. And the e-way bill can be generated using e-invoice data. This is something that is going to happen over a period of time, where the e-way bill, which we all of us now generate for movement of goods, itself can be maybe substituted by the e-invoice. So that e-invoice serves multi-purpose, not only the invoice, but also of an e-way bill. This is what is the government statistics on how many taxpayers have increased over a period of time, and what is the spread of the taxpayers, and how many invoices have been reported over a period of time. You can see how the invoices have increased. About 214 crores has now become 224 crores and 283 crores. So average count of invoices per month per taxpayer is about 32 or something. So that's the statistics which they are able to point out to say how leverage of technology is benefiting the business as well as the tax administration. And finally, we end up with what is called e-accounting. So we start with returns, the e-invoicing, then the returns, and then finally how e-accounting is being looked at as a larger canvas for the purpose of identifying the total turnovers of companies. So this is a recent development in the field of accounting. What it means is that all the transactions will be recorded online server or a database. And for opening it, it will use a login ID and a password. Now, with the application of e-banking system, there are changes in the accounting system, as most of the accounting services are using technologies such as internet and mobile phones rather than registration of documents on papers. Thus, we will have a situation where the source documents and all the accounting records would exist substantially in digital form, and maybe over a period of time only in digital form. This will actually enable business to keep the financial data and accounting software in a safe, secure environment, allowing real-time access to authorized users. So this is the features of e-accounting: a universal access, quick rectification, easy adaptations to change in law, the maintenance of large-scale business records, and a quick access to the data, whatever data you want. This is just one list of the accounts to be maintained under GST law. Once the e-accounting comes, all this will go as part of the e-accounting. In fact, most of the big businesses did shift to maybe a SAP or any other methods you have for the purpose of having all this information online. But I have come across a number of situations where purchase registers, which were maybe manually done about 20 years before, running to a number of volumes, are all part of the systems today in major number of businesses. So the e-accounting would essentially mean that all these will then be part of the systems. So once all this come into place in terms of the accounts, we finally land up with what is called an e-assessment. Now, e-assessment is what is called as a faceless assessment, which has now been started in Income Tax and Customs Act. It has not been implemented in GST so far. Maybe it could get implemented in GST over a period of time. But as of now, the other tax laws, maybe Income Tax and Customs Act, e-assessment has come into place. And in 2019, it was first introduced in respect of income tax. What was the purpose? Eliminate the interface between the assessing officer and the assessee to the extent that it is technologically possible. Optimize the utilization of sources through the economies of scale and functional specialization. So the whole purpose is that people talk through systems, provide information through systems, and the analysis is also made based on what is available on the system rather than what is explained to them. Sometimes it will work, sometimes it may not. But to start with, they said, let us implement it so that we really know where we stand in respect of the functionalities. This is how the whole system operates. There's something called an e-assessment center at the national level. Then a regional e-assessment centers are there. Then individual units are there, which will identify points or issues. Then we have a verification units, technical units, review units. All of them different, I should say, spots in the government machinery, which will do each one of these activities so that there is a look at the information of an assessee without the human interface and studying of it in an objective manner. That is what is expected. An objective manner, keeping in view what the business wants, how the business operates, and how globally the business or a particular trade functions, so that the ultimate output is given through the system at the fastest possible time. Now, simultaneously, they have also brought in what is called the faceless assessment under the Customs Act. Now, what they call as Turant faceless assessment. This is from 31/10/2020. It is based on what is the customs automated system assigning a particular bill of entry that is identified for scrutiny to an assessing officer who is physically located at a customs station, which is not the port of import. So the actual bill of entry will get scrutinized by an officer who is unconnected with the import, place of import. It's more to ensure that maybe there is an objective assessment of the information that is declared in the bill of entry, so that unnecessary queries are avoided. And this is the objective of faceless assessments. anonymize the assessment process, remove the physical interface between trade and customs to ensure uniformity of assessment across locations, to promote sector-specific and functional specialization, and to automate end-to-end clearance process. So in fact, the e-tax landscape, what we are going to see is what will ultimately will come out of all this. So when you look at a customs clearance, people who import and people who want to clear, ultimately the idea is that right from the stage the bill of entry is filed till that stage the goods come out, it should be as if you are not seeing anybody, but the goods move on their own in terms of the processes. Now, how it gets done, is it working successfully now, is all a matter of dispute. Some people are happy, some people are not happy, but then the objective is that this is how it will evolve over a period of time. There's just a small table of how the overview of customs processes before and after the Turant customs process. What they have seen is, before this process, it used to take about 3 to 4 days in the customs for the goods to come out. The target after these systems have come in places that the goods should come out within 48 hours, or maximum with the customs it should be 6 hours. It's a very ideal objective to have. How it operates, how it will come to is something which we'll have to see. And this is how the institutional setup is there in the customs, where it mans the technology is the basis for both the local setup as well as the virtual setup. The virtual setups will be spread across the country depending upon the commodities. Different jurisdictions will have different products being looked into. So, for example, a machinery all will be looked into. For example, in a place like Madras, then the chemicals will be looked into in a place like, for example, Gujarat. So the all India level, that is where they will have the entire information, so that all the importers who are having a similar product, same product, are treated in the same manner, so as to avoid any difference in terms of assessments and use. So it's a significantly senior setup that is there in respect of the assessment centers headed by the chief commissioners, the jurisdictional commissioners, etc. And this is the function of an NAC, monitoring of assessment practice adopted by different groups, ensuring uniformity of classification valuation. This is the whole purpose of adopting technology for all the tax administration, both in terms of the direct tax as well as indirect tax. This is how technology will be leveraged by the government to ensure that there is uniformity in classification, valuation, etc. So there is a typical process of faceless assessment. So now, what are the key takeaways from this session, where I have taken you through the systems being adopted by the government, where technology is used to the maximum extent possible to avoid human interface between the tax administration and the assessors. The first thing which I would see from all this is this: all of us in the business should recognize the new tax regime is going to be in terms of technology driven and looking at the business transformation and handling the issues. So the new tax regime will look at using technology both from a handling of issues, and the businesses will again recognize that technology is going to be the basis for their conversations with the tax regimes. Therefore, there will be a substantial implementation of digital, there would be a digital transformation, in fact, for various tax functions. So both from a business point of view as well as from an administration point of view, there has to be what we call as the next gen tax infrastructure that would be in place. And why this tax, or how this tax infrastructure will be used, is to manage the e-tax landscape and to tackle compliance related issues. More importantly, this will enable both the administration and the taxpayers, their public opinion across multiple jurisdictions, so that you can use this to encounter any obligations or any problems you have in the implementation of tax technologies. So ideally, if you look at it, today technology is bound to stay in terms of procedures, in terms of the processes of the government. So it's essential that we as businesses do have enough preparations and procedures in place, even within the organizations, to be in line with what the government wants us to look at. So I think this will give all of us a broad view of what the government is looking at in terms of the, I would say, a formal implementation of or use of technology in tax administration. Thank you for this patiently listening to me. I'm open to any questions which any of you have.
So thank you so much, Mr. Shivadas. Ladies and gentlemen, to go beyond the typical CFO role, etcfo.com breaks down digital transformation and compliance for a robust, agile, and resilient future. As part of this initiative, Future of Compliance, brought to you by Clear from the makers of Clear Tax, we'll explore various aspects of compliance with the top CFOs and industry leaders of India. Stay tuned. Thank you.